Welcome to last week's review. Sorry, this is a bit late. Um, there's really just no excuse. Didn't get it done on the weekend, and then the week has just been a bit of a crazy one. But wanted to get to it nonetheless, just because I think it was an important review, and perhaps subconsciously I was avoiding it. But we're here nonetheless. So this is for November the 4th to the 8th, which is the technically the first full week of November, but we can call it the second week, just because we did have NFP in the first week, and last week was a crazy week. It was obviously US election week. And so going into it, I knew it wouldn't be a normal week. I think it was always going to be a highly volatile week. In hindsight, not as volatile as I think I anticipated. And in the moment, I think I attributed a lot of losses to the uncertainty around elections. There's perhaps NFP as well, but I didn't trade NFP. I wasn't in any positions. And I think part of that attribution is fair, but um, there's a part of it that goes into just taking some invalid setups. Whole one, to be honest, but we'll get into that a bit later. My ASR has changed slightly with this next 4 weeks of my plan. And that has to do with the trade building protocol that I'm now currently doing. If you don't understand too much about what that's all about, then check out my previous review where I went into a bit of detail around the changes in this current plan and what some key takeaways were, and what my intentions are for this next 4 weeks. I'm not saying 20 trades because it will be 4 weeks, and that is all around this trade building protocol. So last week, 6 trades taken, another busy week. Yeah, 5 losers, 1 winner, down about 2.4% on for the week. And I think in total it was about 3% on the account. So I said 5 here because one I'm still holding. It was a trade taken on Friday. Yeah. And I took partial profits early this week. So geez, we can actually I'll leave it to this. I'll leave it as 5 because the system, once I fully close out the position, it's gonna reduce this to 5 anyway. So yeah, 5 trades taken, 4 only met the plan, 1 was invalid. And it was invalid because of something a technical error I realized in hindsight. So not because of impulsivity. Well, look, the underlying may be subconscious, but at the surface level, it's the technical parameters weren't met, or rather, the high time frame environment, if I'm going according to my plan, wasn't conducive for trading. And so, yeah, that's one invalid trade. And with this protocol, I'll now start collecting data again from week 1, or I'll now reset to week 1 because it has to be 4 consistent weeks of taking every single setup that meets the plan. And this was week 1, but now because there's been an invalid trade, next week will be week 1. So it's on paper it's 4 weeks, but it could be a lot longer than 4 weeks depending on how disciplined you are in executing as per your plan. At the moment, it's looking like it's going to be 5 weeks for me. And so I then also just highlight the risk level of each trade. So majority of them were high risk, which was interesting. And this is something that's new as part of the set, is differentiating between what trades or what setups are, or what trades I take from my setups are either low or high risk variation. Because in the second part of this trade building protocol, after the 4 weeks, I'll then go into another 4 weeks of only taking low risk setups. So hypothetically, if we were in that phase of, you know, this period or this protocol, I should have only taken one trade this week. So that's just interesting to see in hindsight. And so what did I learn this week? Um, yeah, I'll just kind of go through all of them because there's not as much like there used to be before, not as much sort of reflection or thoughts or whatever. But yeah, I was using the incorrect times for my New York kill zone. I think that's just because of now coming out of daylight savings, and things being adjusted slightly. Well, I think they set their clocks back an hour or forward an hour, one of the two. But technically now my market open times have shifted forward 1 hour, with London session now opening at 10 and New York at 4. So that obviously affects when I now get to the trading desk, when I do my analysis, when my kill zone period ends, because I'll trade for those 3 hours in the respective sessions. And it's seen my schedule kind of change slightly. And then minor and major 1 hour ranges influence whether trade is low or high risk. And I was just making a note of observing how these play out respectively, to kind of determine how. And that's just something I picked up this week, because you can, within one, let's say 4 hour impulse lower, there can be multiple 1 hour impulses and corrections and impulses and corrections there. Let's say you have two or three. And so technically, your 1 hour range could be taken from multiple points. And I've just noticed that in a way also influences how high risk your trade can be, because obviously if you're dealing with a shallow correction, and price ultimately then retraces quite deeply relative to a more major swing point, then the trade you took, in the shallow end of, that range were lower quality, or not lower quality, but higher risk trades, because obviously price has the potential to retrace deeper. So that's just something interesting that I found, and something that I'm observing over this 4 weeks, because there will be minor modifications of the plan at the end of this 4 weeks. And then another observation that I'm wanting to make is whether 15-minute sweeps of liquidity within a key area or key indicator area influences whether trade is high risk or low risk. And this is quite interesting, because it feels like I'm coming a bit full circle with, how my plan used to be structured about 2 or so years ago, where I'd have my order block or fair value gap, and I'll wait for price to get into there. And then only once price is in there, then I'm waiting for a sweep of liquidity. But that was from your 1 minute right up to your 20-minute, I think. And so what's different now is that I'm identifying sweeps of liquidity, but it doesn't have to specifically be within a key area. It can, liquidity can be swept as price protracts into an area, and then obviously distributes in the direction that we're going to go. But I'm just observing more often than not that we may sweep liquidity into a key area, and then I obviously wait for my entry confirmation. I take it, and I'll illustrate this on the chart shortly. And what I've taken as an entry, let's say it's a short, from a bearish order block. That short that I've taken is just a minor retracement before we then sweep the high from where I took the short before we then come down. And fortunately, at the moment, my stop placements are quite wide, so it's rare that I'm taken out by those, but I'm seeing them more often, and that's a potential opportunity to get more refined entries, but also to avoid losses where I'm taking setups in the right areas, but obviously a bit too early relative to when price is ready to go. Um, and then, yeah, a big one, which I don't know why I didn't highlight, but I said here I may have been because I think it was an observation on the day. Um, I may have been taking invalid setups throughout my second set of dots by using the weekly range EPD levels instead of the daily range. And after further sort of investigation, I was definitely taking some invalid setups throughout my second set of data. Um, and this was interesting because something changed over those 2 months in terms of the way I was interpreting the market, where my plan is very specific in that when I'm framing my high time frame environment that I want to trade in, I look for a daily impulse. And that daily impulse will then establish for me the range within I'm trading in. Because I will, let's say, for example, it's a bearish impulse. Once price starts correcting higher and I'm looking for it to get up into fair value, I can buy as price once price is established a 4 hour trend. And then obviously once we get into fair value, which will be our premium area, after a bearish leg, discount after a bullish leg, then I look to short down back to the equal lows of the range. And somewhere along the 2 months, I switched from looking at this on a daily to a weekly time frame. And in hindsight, I almost remember the justification of this being that the weekly is a higher time frame, higher than the daily. So it's going to give me more accuracy. But also now, in hindsight, I only justified it in that sense because if I was basing it off daily ranges, and again, I'll show you now on your USD, um, there would have been a lot of setups that I wouldn't have been able to take. EU and odd USD arguably would have been invalid for the last like 3 or 4 weeks because of how overextended the daily is. Um, and so that was interesting and arguably one of the biggest takeaway from this last week, which is what led me then to realize that one of my trades here were invalid because I thought at the point of taking the trade, this EU short here, um, I thought it was valid, but I think it was just realizing it after that I I thought it wasn't. And so yeah, that was quite a key takeaway. And then the last thing I kind of note is just trade with caution in the days leading up to an election, especially on the election day. Yeah, which is I'm glad I was actively trading during this time, during the election time, because now I have data that I can use going forward to be able to justify certain decisions because it's based on my actual data that I collected during the previous election cycle. Doesn't mean I won't trade, but I may trade with, either lower risk or um, if I'm anticipating something to happen, then I just need to proceed with caution or understand that it may not unfold as smoothly. But I think better that than having sat on the sidelines and not knowing how things were playing out in real time. So, despite this being a period where I took quite a bit of losses, um, I think there was a lot that I learned from this sort of election phase. And so, yeah, just coming to the Alpha Capital account before I get to some analysis. See my phase one, phase two, um, and yeah, just coming to the metrics. Oh, what's going on here? Yeah, metrics started October 21. Yeah, balance is about 97,800 because I closed this partial profit on Monday, um, about zero point 0.8. But yeah, equity sitting just at about break even now, because I do have a USD JPY position that is floating. That same position taken last week. I haven't taken any positions this week. I've just held that one position, and it's really um, just been working this week, which, yeah, has been a sigh of relief, I think. But yeah, this was the position. And I'll just break it down for you because USD JPY at the moment is the only valid pair. And I think it's because we pairs are at an interesting time now, and it's a time where I think this is a time historically where I've probably lost the most money, or taken the most losses because there is a very predominant trend and everyone's trying to ride that trend. And there's a very, very fine balance between being able to capitalize on what's left in this move, um, and arguably jumping on a moving bus too late, um, which then is going to just reverse on you because now you're part of the group that are just being used as counterparties for the opposite that's about to happen. But then in the same breath, we're at areas where price is showing or indicating that there's major reversals pending. And sometimes we get a bit too trigger happy in these times and try to anticipate or predict rather when the market's going to turn. And then you just end up taking these losses repeatedly, waiting for, the trend, the trend to kind of reverse or things to kind of flip instead of waiting for clear confirmation because these are pretty high risk areas. And so just starting with USD JPY, and then I'll do dollar index and come to the others. There's no doubt that we're bullish, right? But zooming out, this is all part of a deeper retracement on the daily as part of this daily swing. And this is essentially what I was talking about with major and minor swings, where you can have one daily move here, but then there are multiple points that you can take the swing from. This was a swing at one point, right? But this has always been the kind of OG swing point, and it's kind of reinforced more on pound JPY, which looks very similar. But the daily, after this bearish sort of impulse lower, has now been retracing higher. We kind of stalled a bit at equilibrium, and then at this optimal trade entry area, the 62% level, and now we're heading deeper within optimal trade entry, that optimal trade entry area. And where my take profit is for this current order is right at this area here, which is a daily sort of time-based liquidity point. And so I see quite a few orders for shorts that are already in kind of above this area here, but in the same at the same time, quite a few buy stop orders for, obviously this is the last daily high. After that point was breached there. And what was this thing doing here? And so similarly to here, when we broke above this level and continued higher, there's going to be a group of traders observing the same thing here for when we break above there, thinking that we're going to go higher. And so I think this is, for both buyers and sellers, an attractive point for where orders are potentially resting. And that's kind of what's influenced my take profit area in that region. And so last week we saw price impulse aggressively higher. I think it was just positive sentiment to Trump getting ahead initially at the polls. And on one hand, I was like, this could potentially be a sweep of liquidity to the upside before we then distribute lower. And we could have been collecting liquidity above here. But I think because there was nothing really on the 4 hour on USD JPY, that had kind of indicated that we were starting to shift structure in any way. Pound JPY is a bit different. You can see it's just consistent higher highs, higher lows, higher highs. Even when we came to the lower low, it was more of just a sweep of liquidity, and then we displaced to the upside after correcting to the downside. So that kind of gave me more confidence that this was more of a correction as opposed to a shift of structure. And we corrected quite deeply. I think it was at the 70% area. Almost stopped me out of this position. So yeah, 4 hour was still counter trend to that daily bearish bias. And my entry was in line with that 4 hour counter trend. So those are what I'll classify as resistance entries. And then earmarked this fair value gap here. One of the positions I took last week was a USD JPY buy, I think from these areas here, somewhere there. A bit shallow in the correction. It was one of the high risk setups. Yeah, so this UJ long here, which was high risk, and that was because price was at more of a shallow retracement point. So my 50 and my 62% regions are still classified as high risk, but then once we get to the 70% onwards, it's low risk. But then once we start tracing much deeper, it becomes a bit more high risk. But that's just unnecessary detail. And so we got into that area. Minute 15 gave entry confirmation, and then yeah, I executed long. This position targeting the daily up there is a 9.3 R, which if I took this on a 1% and just held it, probably would have passed phase 2 by now. But that's also not the point. It's, you don't try and find the one trade that's going to change everything, because you'll always be trying to find that one trade, and more often than not, you're just in the wrong headspace, and it's going to mess up with your management, and it's going to make you a bit too trigger happy. So it's more, regardless of what I could have potentially made on this, it's 1:9. I still stuck to my risk parameters, 0.5 R. Once we got to 2 R, closed half the position. Even though saw it had the potential to go higher, the market can still do anything. I think we forget that in euphoric times, is that it's still a matter of probabilities. Nothing is guaranteed until you close that profit, or until you reach, a certain target. When the trade is still open and floating, can do a 180 on you in the blink of an eye. So remain disciplined and follow the plan. And that repeated over time will then lead to more consistent outcomes. Um, you don't want to make it in one or two trades. You want to be able to show over a good number that your actions repeatedly are leading to favorable outcomes. And that's when you can develop, confidence or certainty in uh, an edge uh, that has a certain probability of playing out that you can back. And so, yeah, one thing that I did just realize this weekend in this trade, and I'll highlight it more in the review, was that price trading all the way up here, about 8 odd R, I wasn't comfortable with leaving my stop at break even. That was a bit of discretion used in this management that I think, for the sake of a challenge, makes sense. I think when you're trading your own account, look, that's probably what you do anyway, because you're not trying to achieve a profit target. But it makes no sense for me to basically have made the drawdown back and then let this thing go all the way back to break even. So this is kind of my line in the sand where I'm willing to see that, um, yeah, come down to, but beyond that point, yeah, I wouldn't be okay with that retracing any further. And then just very high level on, the other dollar pairs. Dollar's just flying. And I think that's what's fueling USD JPY as well as some of the others. Um, and when we look at the daily or the weekly range, we're starting to approach these areas up here where we have historically just been well protected. We haven't been up here in some time. Obviously, we've been in a very bearish sort of environment for the better part of the second half of the year. But it will be interesting to see how price behaves in these regions here, because um, we've got the momentum, we've got the volume, we've got the fundamentals that can induce more volume off the back of the election. So will we continue with this to the upside, or will we start to come lower? And that's what I was just coming back to, in that we're in high risk areas, because when the trend is so predominant, those who have been banking off moves like this, obviously not on the dollar, but on other dollar pairs or dollar cross pairs, you'll want to see this continue, and you may not take these areas seriously and think that, okay, because we've got that Trump hype at the moment, we're just going to blow past these areas, and we may do that. But I think you can't underestimate the fact that these levels have held, and these are daily and weekly levels. So we're going to see some resistance here, because there's those on the other end of the trade who are seeing these as high value areas where we could potentially short from here and sell off, and that would make sense technically. But at the same time, we need the market to give us confirmation that it's going to do that before we just start pulling the trigger at every single high that we see. You could have made a little here, but eventually it came higher. So you want to see, obviously, the slowdown over time, and it's going to slow down. It's not going to just shift in one go, but then you'll start to see, obviously, characteristics of a clear shift, which we haven't started seeing yet, and it could become impulsive very quickly like that. But I think in times like these, you gotta exercise a bit of caution, because the potential to become a bit range bound in these areas is high. And after a period where we've had so much volume and momentum, it's natural to want to see a continuation of that. But that's also where you give back a lot of money that you've made in that run, essentially. And then you end up being net, sometimes in a net loss. You're lucky if you can get net break even, but that's not the goal of this. You want to be net positive. So don't let the euphoria of this run that we've seen blind you from what may be taking place now and how the market may be shifting. Because this is where a bulk of traders usually lose or give back all that profit that they made um, in the run leading up to the boring times. Because we want trading to be exciting. We want it to always we want to always be executing, right? We don't want to sit on our hands. We're impatient by nature. So your USD, what I was basically alluding to with uh, what I was doing that was violating my plan was instead of focusing on this most recent daily leg, which you can see I'm doing now with price being overextended, but arguably should have been doing this whole time after we swept liquidity to the upside here and distributed lower. Um, what I should have been doing, this is the range I should have been looking at over October, the whole of October. Um, and unfortunately, if I was looking at that, I wouldn't have gotten a lot of the setups that I did get because I was looking at this range here and saying, "Oh, price has established a trend towards this discount area." Um, and so I was trading those counter trend setups, and maybe that's a gap in my plan because there are trades that I took in that period that were technically invalid for my plan at the time, and my plan now still that contributed towards me passing phase one. And so I think it's just digging into the data and trying to determine, when is it appropriate to use the weekly, when is it appropriate to use the daily? Because I don't know, it's hard to sometimes think that I wouldn't have traded this pair for over a month and missed out on all this opportunity. Surely not. Like I understand the nature of, how I look for setups, but there was opportunity there at the end of the day. And the way I was looking at the market at the time capitalized on that opportunity. But then I'm also seeing the flip side of it where that same bias led to me taking a lot of unnecessary losses. And so I think I just need to figure something out there. But at the moment, I've obviously reverted back to what my plan is. And that's how I define, that's why this is invalid still for me at the moment, because the daily needs to begin establishing a trend towards this 50% area here. And I'll see that either, well, when one of two things happen. We form this low here. I'll then count 4 candles or 4 days. If the fourth candle closes above the open of this candle that formed the low, then there's a high probability that we're coming back to this 50% area. Or alternatively, on the 4 hour, you see a push higher, a proper correction, and then a push higher to confirm that trend. Then I'll obviously look for an entry on the pullback to then take that higher. More often than not, those two things line up because it takes a couple of days for a 4 hour trend to establish itself. And so that's what I'll be looking for on Euro USD. Very similar on AUD USD. In terms of price being overextended to the downside. And we're just waiting for that proper shift. I thought we potentially saw that with price impulsing above these levels. And again, you probably had orders resting above there, to buy into that high. And the market ate that shit up, bro. So that's why it's important to wait for that confirmation. You can see the shift to the upside, but wait for the trend to be confirmed, because until you see that pullback and continuation, it's kind of still being established and it's still a bit high risk. So with AUD/USD, it's a bit different. We are still in a key area. I think this is a weekly order block, and this level may potentially hold. It remains to be seen, but similarly, I'm just looking for price to begin establishing that trend to the upside, because until then, I'll just be taking chances on when this move's eventually going to occur. It can happen there, it can come down, then I'll take another trade there, and I'm trading against the trend at this point. But then similarly on the opposite end, you know, you can take, I think short-term shorts in an environment like this, obviously that's overextended from a bearish point of view, are better setups than betting on the major reversal, because the trend at the moment is bearish. So you're trading with the trend. If you can take something there, price comes up, take something there, taking profit there. It depends on your strategy if it allows that. But trading with the predominant trend um, will always obviously fare better, I think, in the long run, because price hasn't shown its willingness to hit higher. And it comes back to that thing of institutional order flow and institutional sponsorship, which the last 2 weeks of my back testing have been about. If you haven't checked those out, check them out. Institutional order flow focusing more on the weekly and monthly areas that we anticipate price to obviously react from and move from. And we are in those areas, our weekly order blocks. On the monthly, I'm sure there's something there. Yeah, we're just trading below this monthly low, which is where a lot of retail volume lies. But the bodies obviously show us where the institutional orders rest. But then we've obviously also on the monthly time frame got this order block here that we're now tapping into. And that's fine, we can see that. But then we also need to see sponsorship from an area to say that, okay, big money's come in here and are sponsoring this move. And we see that by means of displacement, clear conviction that the market's moving in a certain direction. We're getting very range bound on a lot of these pairs. And I think it's because there's that tug of war between buyers and sellers in this area. But arguably more so, it's the generation of liquidity. Before then we displace, either higher or lower. And so unless you have a plan that can help you differentiate between the two, you're going to keep guessing and you're going to keep taking losses. You'll take a small win here and there. You may take a big win, but you just got to be patient with it, especially at these times when you're in high time frame areas that price can potentially struggle at. You just got to be patient with it. Pound JPY, told you it's clearer on this pair in terms of the daily range. We are hovering just below the 70.5 area. And so I think potential for this to sweep higher and then potentially sell off. So this is at optimal trade entry area on the daily. The 4 hours where it gets a bit tricky, because we had this lower low, higher high, and then we broke this to the downside. And this was at a point where now we've got the counter trend, but it's still being established. Remember, because you need that continuation to now confirm the trend. And we've just begun going sideways here. So while I do think there's that opportunity to go higher, I also know pound JPY has a tendency to correct or just move sideways for a very long time. And my plan does state, if the 4 hours range bound, then there's no trade for me. And for me, I'm classifying this as range bound. It's just moving sideways. I can't bank it off, this move here. Obviously, there's the daily behind it, but we still have this potential to head higher. And unless the trend was clear, like USD JPY, where we didn't have this break, then I would be more inclined to maybe take that to the upside. And so what I'll be waiting for now is I'll have two areas that I'll clearly define, mainly this high and this low. And then I need to wait for price to either get above that high to look potentially for continuation higher, if that's what seems to be taking place, or then for areas where we're going to start shifting to the downside. And then similarly to the downside, if we break below, then obviously I'm looking for continuation because now the 4 hour has, confirmed and established, what it wants to do. So that is the analysis for the week. I hope there's a few things you took away from that, both from my review as well as just from technically what I'm seeing. And yeah, I think there's a lot of potential in what we may see in the coming weeks and months as we end off this year. But I think there's going to be a period of potentially low momentum before we see those distributions come into place. Because remember, we've had weeks of high volume. So it's only natural that we slow down for a bit before the next big move. And so I urge you to just exercise some caution in this time, because preserving capital is also a key part in being profitable over time. And no trade is a trade in a sense. And so, with that being said, remember, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.